Is Fortinet or Palo Alto the better cybersecurity stock? Well, Fortinet has a market cap of $44 billion, and their shares are trading at $58.13 today and are up just 0.6% year to date. And taking a look at Palo Alto, they have a market cap of $105 billion and are trading at $323.87, who are doing a bit better, being up 12% year to date. And zooming out, we can see these stocks have been doing exceptionally well over the past 4 years and beyond. And as for December 2026 price projection, Fortinet's earnings per share is expected to be $1.90, and their current price to earnings is 41, but I'm going to use 32 for this calculation because 41 is pretty high, and that would give us a stock price of $6.80 a share, which is 4.6% higher than where it trades today. And as for Palo Alto, their 2026 earnings per share is actually expected to decline around 2026 to $4.19, and their current price to earnings is around $2.30 right now, which is just insane. So I'm going to use 55, and that gives us a share price of $230.45, and that is a 29% downside from today. As for analyst one-year price forecasts, it looks like they're expecting Fortinet to be trading at $69.13, which is a 19% upside. And for Palo Alto, they're expecting a price of $342.40, which is a 6% upside. On to earnings, both have beat all 4 of their last earnings calls, and of course, neither stock offers a dividend. And as for the debt to equity, Fortinet has a shareholder equity of negative $137 million and a total debt of $993, which gives them a negative 722% debt to equity, and they have a free cash flow of $1.7 billion. For Palo Alto, they have $4.5 billion in shareholder equity and a total debt of $1.2, and that makes their debt to equity around 26%, and their free cash flow is $3 million. In terms of revenue and net income, Fortinet's look great across the board, whereas Palo Alto's revenue does look really good, but their net income is just starting to trend positive after flipping in 2022, so it's going to be interesting to see what happens to that. And overall, it's really nice to see each company have such great revenues and earnings beats lately, even if their valuations are really high. And as for ratings, I'm going to have to rate Fortinet a hold and Palo Alto a sell, because in Fortinet's case, normally a debt to equity that bad is a huge red flag, but with their massive free cash flow, it looks like their shareholder equity is about to flip positive again, and it doesn't look like it's that big of a deal going forward. And Fortinet also has really good earnings growth projections. But as for Palo Alto, fundamentally they are very strong, but their valuation is just too much, and their earnings are expected to take a hit this next year. Even if they are expected to swing back up longer term, it's just the valuation right now is just way too high to justify, and so I have to put it as a sell just for that. Anyways, that's all I have for you today on Fortinet and Palo Alto, so please drop a like, let me know which stocks you'd like me to cover next, and I will see you next video.